Good evening. Ira Epstein of Linn and Associates with your metal market wrap-up for this Tuesday, and we're at the 22nd of June 2021, just after 5:40 p.m. Now, I want to remind everyone that tomorrow we're going to have our What's Up live webinar. You'll see an icon up here. At any point you can click on that. That's your registration form. You'll be sent, after you fill that out, all the instructions when to come in. Come in at 12:15 p.m. Central Time. So now let's talk about today. You know, the market was waiting. I was, and I know TV was everywhere I watched. Everything turned on the Fed Chair Powell's interview, question and answer period, in front of the House Financial Committee. What a terrible House Financial Committee interview. They missed everything. It was more like a love fest. They're talking about the unemployment. What's the key that the markets are looking for? Is there going to be a tapering? When's it going to happen? When does the Fed foresee raising interest rates? What might be the impact of that on the market? Maybe then what's happening? So they went into the employment issue because that's their voters. They didn't go into any of the market issues, which the market wants to see, at least balance it. The Fed chair said just what we know and what I've been writing about for a while. You got retirement people. I'm a baby boomer, they call it. A lot of us in management and so on, well, those people are retiring. And now the question is, who's going to fill their shoes? It's the upper echelon that's getting it easier to get jobs, but there's not enough new people filling them. And the lower level, we're seeing that people still aren't coming back. To a person almost, they were saying, you know, let's find out what happens when this government program ends and if people go back to work at that point in time. But as a market technician, forget all that. I think this is what's going on now. We saw the wave from last Wednesday. Tomorrow will be that week since we had the FOMC meeting. The market had a jolt and it came roaring back. NASDAQ's at a new all-time high. So don't tell me indices are not paying attention. The dollar down, but if you really look at where you're at in the euro, you're pushing the 120 area. This isn't that big of a correction that has taken place. The bonds and the notes are very, very stable. And the question, of course, that was asked about inflation, which affects the metal market, is how much inflation do the Fed look for? They still think, according to Mr. Powell, it's transitory and it'll be nothing like the 70s. Giving you his words. So, as I told you, we pulled back to the 18-day average of closes after we got all the way up here. This is your test. What I don't want to take out on a closing basis is the low here that I showed you yesterday. You have not done that at this point in time. You can also see how suddenly the market's coiling up here. It's almost like when you got up to the tops, if I come back here and you get used to these patterns, where the market started digesting it right there. So the flip-flop of it is now taking place. The question is, does it make a low off of that? Well, one of the things that I start looking for are the Bollinger Bands and the swing lines and moving averages. So these are the swing lines. Lower highs, got a bounce, but that's all in a lower low. As for the resistance, I'm expecting, normally what happens is when you slice through these moving averages, on the way up the market fights a battle as it tries to get through them, if it's going to get through them. And so I'm looking for $17.9680, about $18 higher, to be the resistance point. In terms of the Bollinger Band, well, you got under it. Now here's something very bearish that could happen in this market. If the 18-day average of closes settles under the 200, that's not going to be very pretty. As a technician, that's another hammer in the bear coffin for this market, not going too far. It's also because they've gotten so close, you're building another resistance zone in the market. So the first one is here. The second zones begin from 1848 to 1856. When you look at momentum, you're oversold. So we had a market that had a vertical price break. It's going sideways. It's moved to the right side of the Bollinger Bands, which is very typical. Resistance up at the 1796.90 level. And what traders don't want to see is that you go back down and start riding the lower Bollinger Band. In other words, just sitting on it and staying there. Hasn't done that at this point. Gold-silver ratio still favors the gold. Every time the numbers go up, You need more silver to get 1 ounce of gold. And silver's fighting at the 200-day average. I pointed this all out yesterday. Same battle, same statements I made then. If you clear that, then you're looking for the 2669. The bigger picture in both the silver and the gold is there's no buy signals that are coming about right now. It's all a question of maybe not being short anymore and letting the market digest what it's done. In the copper market, I don't think you're going to keep copper down that much, that long, if you're going to get economic recovery out of India, Europe. It's already in the U.S., it's happening in Canada. Mexico's even seeing better things. The world will need more copper, so that's what's going on. Battleground, as I pointed out to you, I thought it would be the 100-day average if you cleared the Bollinger Band, which you did, and when you fell there, you haven't gone too far away from it. You're also not trying to embed. So again, it's one of these markets that needs to digest all this. We might look back one day and said, oh, look at how cheap it was. It was a buy. Folks, that's not a buying pattern. It may go straight up from here, but it's not a buying pattern. In the October Platinum, you've had a wave to the downside, refusing to embed. Very hard to attract short sellers when you're oversold in a market. It'd be one thing if you're embedding. You're not in this market. Palladium, not embedding. You're coming down. I'd put my hands like that. The big money was made on that vertical drop due to the Fed talking the tapering, and now the market's sort of going, okay, what next? In the dollar index, you had 3 days up and over the upper Bollinger Band. You came down yesterday and again today. And now the question is, what is the market going to do? So if we look at the numbers today, you embedded. Both numbers were over 80. They were over yesterday and the day before. But if you look at what it did, you've got to be paying very good attention in the morning. You're at the very bottom of the trading range. When you open tonight, you're probably going to lose that embedded reading. It's the way the momentum works with it, unless the market gives you a pop. If it doesn't give you that pop, you're going to lose that. Don't fall into that trap. Be very careful here. I like that to first set in. Then I'd be looking, and for those of you that take the enhanced Bollinger Band course, you know the numbers we'll be looking at there. I'm not going to spill them here for free. And if you kept the embedded, you know what to do. Then you're a buyer, I'll say that. Not if you're losing it. Ethereum, trying to fight to get over the 18-day average. We've got 1, 2, 3 days under. We don't know where today will enter. Are we embedding? Because that'd be very bearish. You can't count today because we don't know what it'll do. So yes, both numbers were under 20 yesterday, the day before, which is Monday, and you were not there on Friday. So we have to see how Wednesday's going to finish up here to see if there's anything that should be done. Again, I'm going to remind you, we're going to have the What's Up live webinar. I open at 12:15. I want your questions ideally then so I can sort through them, look at them, set up the charts so that when we go, I'm moving like that for you on the charts. If you wanted to write me ahead of time, you know, I wouldn't mind that either. You can always write me and it helps me set up my charts at Ira Epstein at Linn, Linnllc.com. I'm Ira. Hope to see you all tomorrow.